Welcome back to Trading 360. I'm Nicole Petalides, live on the floor of the New York Stock Exchange. I'm glad you're with us because now it's time for the big three. 3 stocks, 3 charts, 3 trades. And Ben Lichtenstein will take us through the charts. Here to take us through the trades, Don Kaufman, co-founder of Theo Trade. Great to see you both this morning. Don, how are you feeling about the markets as we hit record closes again yesterday, though some shakiness today with the NASDAQ down over 2%. Some of your thoughts, Don?
Yeah, no question. I mean, so specifically today, what we're looking at right now is some sell side activity that is expressly inside of NASDAQ. But the area you got to look at is the advanced decline line is really positive, and this could actually proliferate to a lot more sell side activity. Look, the moves that we're seeing in the last couple of trading sessions, really since last Thursday, have been absolutely manic in terms of rotations.
You know, and people talk about maybe some of the unloved stocks getting a bid or a rotation in the market, et cetera. But we managed to hit the highs, but you're talking about the volatility, and I see it. How about Exxon Mobil? This is a name right now as we see 82.53 the barrel. Exxon's on your radar, and why is that?
Yeah, you know, one of the reasons is I think the political climate, as your previous guest was just mentioning, is going to be really, it's going to be beneficial to a lot of the energy complex and much more specifically into Exxon Mobil. So in this particular case, like we're going to be looking at, you know, maybe a lift as we start to receive some of the polling data in the next few months. And I got to tell you, I want to be in the energy business right now if I'm going to be long in this marketplace. Energy looks like it's going to be a fairly good play. So this trade in Exxon Mobil is out to the September 20th expiration. As I said, the political climate is definitely turning in favor of energy. I'm going to be buying the 120 calls, selling the 125 calls. This trade's done for a $1.35 debit. Decent time to look towards the energy complex and several of the energy stocks for bullish plays into this election season.
What do you think here, Ben, when you take a look at these charts?
Yeah, the technicals support the fundamentals, Nicole. This one is trending higher across multiple time frames. You know, that's what I look for. Let's break it down. We'll start off with a more granular, work our way up into the longer term, and you're going to see exactly what I'm talking about. All 3 of the charts I have for us here today in terms of Exxon are bottom left, top right, and feeding into exactly what Don was just kind of laying out. Let's first off start with the rally we've seen over the last few days into the end of last week and to begin this week from 110 all the way up to 118. And you can see how we're holding on to this upper level. No rejection as of yet. Now, I like this one because take a look here. You're going to notice, what is it? Every $2, the market just in this miraculous kind of systematic and very predictable fashion has paused. 111, 113, 115, and now look at this, we're balancing around 117. So the bull's in charge here, value's moving higher. Again, it's a trend up. Now this chart, we've got a 4-hour candle chart. We're going all the way back to looking at the rally we've seen off the lows in the beginning of January, down around that $95 level. And look at this move up here. Again, we're talking about a bullish pattern. 2 areas that my eye was drawn to. 115 is important right now because we're building momentum through it, which builds up and sets up for a potential test of 123, those highs, if you remember from back in this spring. But either way, a bullish pattern. And then you also have, again, this most recent move lower, not necessarily what they were looking for, the longs, but it held above 103. That was important. And again, just sort of solidifying this working assumption across multiple time frames that trend is to the upside, values moving higher, and you can see on this daily candle chart the bulls remain in control. Take a look here. We're going all the way back to, we're talking about the lows that we saw around 2020, $30 if you remember. A double bottom that formed down there, and it's been off to the races since. Speaking of a very systematic approach in terms of these areas of consolidation, we're talking 40, 60, 90, 110, balancing right now, again, with momentum above 115 here, opening up a door for a retest of 123. This is a stock that, yeah, as Don laid it out here, the chart's very much in line with his analysis.
All right. I mean, he even mentioned 123 there, Don Kaufman. So let's see what you're thinking about for this trade.
Yeah, no, the trade is, again, straightforward. You crack over that 123 level, and we're pretty much home from there. Again, that 123 kind of retesting that other high. We break through there, we're to 125, and it looks like, again, it could take off to that upside potential.
All right, next up, you have a bearish earnings put spread for Netflix. Why is that?
All right, so Ben is not going to like this nearly as much. So to me, this is a very short duration trade and has everything to do less with the technicals, much more with what is going to be subscriber growth. Looking at Netflix chart since the last earnings period, like every ounce of good news is already packed in here for subscriber growth. They better hit spectacular numbers or this stock could actually fall. You're seeing some sell side activity today, but it's pales in comparison what you could see around the earnings. I am actually building an earnings very short duration trade. This one's expires on July 19th, right? It's this Friday. It's a weekly expiration. I'm going to be buying the 615 puts, selling the 610 puts, the $5 wide put spread done for a $1.40 debit, predicated on, look, the news can be decent. It could even be good, but it has to be spectacular or this underlying could fall.
And, I like this short play. You're going to be playing on earnings. Let's see what Ben thinks about which direction is headed. Let's see. Ben, the technicals.
Well, longer term still looks to me like the bulls are in control here, Nicole, but let's just start with where Don kicked things off, and that was with some of that short-term weakness. We've definitely seen some stocks coming under pressure, not just the last day or so, Don. I mean, this really started out into the end of last week. I identified the move lower first and foremost on a 5-minute candle chart. It was up around 700, if you remember. Again, today we're talking down to that 640, 645 area. No rejection, this lower level as of yet. Again, we're talking about a 5-minute candle chart here, so we want to be careful how much weight we put into this, but I think it's pretty easily identifiable the value is moving lower in this instance, currently balancing again around 654, and as mentioned here, no rejection of this lower level, headed into a big catalyst, as Don mentioned. Let's take a look. Stepping back, adding quite a bit of time on, hourly candle chart now, and we're going all the way back to the lows that we saw this spring, early May, end of April, around that 565 level, rally up, areas of consolidation formed at higher and higher level. Again, here's an instance where we've broken down, right? We're balancing around that 677, 680 area. We've come off that, not what the bulls wanted to see, but we still have yet to take out 635. So again, testing a key area, possibly just forming one larger area of consolidation. And with that thought in mind, let's take a step back and look at the daily candle chart, because you're going to see a similar pattern playing out. Not only a well-defined trend up off that spring 2022 low, we were trading around 160 if you remember, but this month just shy of 690. Now we're starting to transition from that high conviction vertical phase to the upside, it looks like, to something a bit more overlapping and rotational. And again, you are seeing that play out here. So that's what's, again, I think on that short-term chart, that weakness, but still relatively contained, still holding up above key levels. So yeah, it looks to me like, although the 5's a little bit of a disappointment, that more granular chart, this longer-term one, again, the bulls are being rewarded for sticking with this one, and it doesn't seem to be rejecting this upper level as of yet.
Okay. Don, have you been playing a lot of the earnings? Is that part of the strategy? Do you love earnings season and do a lot of these?
Let's forget for a second about directional bias. Just push it aside for a second. Don't worry about being bullish or bearish. Netflix has approximately a $55 move implied in the options, right? So I'm going out and buying this $5 wide spread for $1.40. So I've got $3.60 of upside with almost like this 50-50 shot, whether it's going to go higher or lower. And in this case, like, look, we can talk about subscriber growth. We can talk about, what the technicals look like. But the interesting irony, it is exactly that. It's about the strategy. It's about the proper risk reward with a decent size expected move. And it's one of the reasons I love earnings trades.
Yeah, okay. We could sense the excitement. I think we all love earnings season. What about Goldman Sachs? I mean, all the banks have done, had double beats for the most part. Your thoughts? You saw the upside breakout and you thought it was overextended at this point.
Oh, come on, Goldman Sachs. And, again, Ben, I'm going to bring up some specific technicals. You know me, I'm much more of a quant, not a big technical guy, but everything I'm looking at here RSI is just wildly overbought. Stochastics, it's in ridiculous territory. Linear regression, it's actually hitting the upper edge of the linear regression over here. I mean, every aspect of your technicals are just an overcooked chicken at this particular point. And I am taking the short side of this, no question about it. I can get into the fundamentals and talk about credit loss provisions to the future, which I think are going to rise. But again, push that aside. I think its technicals are wildly overbought. As such, I am going all the way out to the October 18th. Why? October 18th expiration's way out there because I'm swinging for the fences on this trade to bearish trade, right? I'm going to buy the 480 puts. I'm going to sell the 470 puts. I get excited about these big out of the money put spreads. This one's done for a $2.75 debit. Again, swinging for the fences to the downside in Goldman Sachs.
All right. He left some time for this trade, Ben. Your thoughts?
Overbought, overcooked, I would argue, does not a sell signal make, right? We've seen this play out before where the trend continues a lot longer and a lot further than we as traders think is possible. And until we get some indication that it's starting to break down, I always like to side with the migration of value. In this instance, across multiple time frames, again, it has been higher. So I'm going to push back on this one, Nicole. We are seeing a bit of a trend to the upside, and we're not really seeing any rejection as of yet. Let's take a look. 5-minute candle chart says it all. First and foremost, bottom left, top right. I didn't really spend too much time breaking down these areas of consolidation up here. I just wanted you to see and let your own eye focus on them. Again, you get into this balance phase where there's not a lot of conviction, but then look, you transition. We saw that yesterday morning, a big breakout here, and then again this sideways consolidation phase topping out recently around 509, moving away from the 5-minute candle chart into a little bit more intermediate, longer term look at price activity. Similar pattern though, bottom left, top right. You can see again where the market's kind of paused and started to consolidate. 410, high conviction move up, and then I always point out, even within these high conviction moves up, you see that pattern, that big move, sideways consolidation repeat itself, the staircase type pattern as we reference it here oftentimes on the show. Balance has been forming around 460. You can see into the last couple weeks the big move up here through this $500 level, and looks actually to me like we're starting to establish, well, again, in a very systematic, every $50 increment type pattern playing out. 410, 460, 510. I like to just make it as simple as possible, and for me, the bottom left, top right's really just jumping out here. Again, trend up. Speaking of trend up, it's well defined off that October 2023 low, below 300 this week, again to above 500. Currently in a vertical phase when you look at it on the daily time frame, because we got green candles here right now, right? Higher highs, higher lows, so we're seeking value to the upside. The bulls want to see us establish value, right? Get something going a little bit more rotational and sideways. But you know what this reminds me of? And this is why I say overbought does not a sell signal make, because you could have said the same thing back in the middle of April. You could have said the same thing back in the beginning of December, right? My guess is some of those indicators were suggesting the same, but price is king here, Don, you know that.
Oh boy, he really put the boxing gloves on for that one. He came back tough, Don. All right, final word, Don Kaufman.
Yeah, the rotation game in this marketplace is coming to an end. It's starting obviously with some tech selling today, but watch this Russell carefully and watch the sectors in the S&P 500. As I said, I believe this rotation game coming to an end possibly in today's trading session.
All right, well, time will tell, right? Don and Ben, thank you both always for the big three. Don Kaufman of Theo Trade and Ben Lichtenstein, they are on the charts, and we took a good look there at Exxon, NFLX, and Goldman Sachs.